Today in the grain market, corn made a new high. With the bullish news, it's now the grain leader. This week, the market was up 64 cents, with commercial still holding a record short position. It was announced that China bought 2 million metric tons, and it's the second largest purchase since 1977. It's important to note that the first largest purchase was in 1991 by Russia with 3.7 million metric tons. The option volatility also jumped up about 5%, with the open interest in strikes all the way up to 950 in both the May and the July contracts. So that just lets you know the expansion of the interest in these markets. Soybeans also was higher, driven by the buying in the soybean oil market, really pushing these markets up. In Malaysia, the soybean oil was up 2%, so that's also underpinning some of the support in the market. Now, exporters have sold 95% of the USDA forecast, and there's still 7 months to go. Even in Brazil, the crop has been rating 18% good to excellent versus 66% last year. So down the road, that could definitely also be something that's supportive in the market. Now, as the calendar rolls into February, the focus is definitely going to be on the acreage, with the Agriculture Outlook Forum on the 18th and 19th. That will tell the tale. And the put-call ratio right now went from 0.3 to 0.5, and this really means that there's plenty of option trade action out there. Now, wheat did rebound today. Futures did regain almost all of yesterday's losses, so it really finished a lot higher here to end the month. It was up 22 cents for the month, and with Kansas City up a little bit higher. Now, demand from livestock production is not fully in yet because of the price ratio to corn. And trading is well above that 650 mark, so it's sure moving along and tagging along with the corn, even with the May contract really right behind. In the options, the most active strike is really that 750 strike. We had 1,500 contracts trade with a total open interest of over 4,000. Now, the May and July calls and the open interest is like 2,000 each for the 820 calls. That just means that the expectation that the market's going to move up is certainly right in front of our face here. So based on the first month of 21, it's important to note that any kind of limit move could also be advanced by synthetic moves in the options. Who knows, maybe $2 or even $3. So I think it's time to fasten your seatbelt because there could be turbulence ahead.